Hello, and welcome to Module 4. We're going to talk about the business plan. A good business plan guides you through each stage of starting and managing your business. It is a roadmap for how to structure, run, and grow your new business. Business plans can help you get funding or bring on new business partners. Investors want to feel confident they'll see a return on their investment. Your business plan is the tool you'll use to convince people to work with you. There's no right or wrong way to write a business plan. Startup business plans should focus on summarizing only the most important points of the key elements of the plan. There are samples for business plans at the Small Businessman Administration at sba.gov. What are the components of a good business plan? An executive summary, a company description, a market analysis, organization and management, service or product line, marketing and sales. Your executive summary, there you're going to explain what your company is. Your company description goes in the next section, market analysis. You need to know what your competitors are doing. That's where you're going to look into the world and see what other people are doing that you're suggesting your business is going to do. You're going to list what your competitors do, explain why it works, and how you will do it better. Organization and management. How will your company be ran? Who's going to run your company? What kind of legal structure would your company operate in? Think about including an organization chart in this section. Service or product line. Describe what product or service you're going to offer. Explain the benefit of it to your customer. Here you're going to include your intellectual property. That's the stuff that you researched, that your experience brings into it. Also include copyrights or patents in this section. Marketing and sales. How will you market your business? There's no right way to do it or wrong way to do it. It's just what works for you, and it's an evolution process. The funding request also goes in your business plan. You want to specify whether you want to acquire debt in the form of a loan, or if you want to give up a little bit of the equity in your business to, say, a venture capitalist. The terms you'd like applied need to be included. The length of time your request will cover. So, what is the duration of the relationship between you and the person that is going to be funding you? Give a detailed description of how you're going to use the money. What is the intent for it? Specify if you need funds to buy equipment or materials, to pay salaries, or cover specific bills until revenue increases and you no longer need additional help. Always include a description of your future strategic financial plans, like how are you going to pay off this debt, or if you plan on selling the business at some juncture. Financial projections also need to be included in your business plan. You want to outline what the funding request is and include financial projections. Your goal is to convince the reader that your business is stable and will be a financial success. If your business is already established, include income statements, balance sheets, and cash flow statements for the last 3 to 5 years. If you have other collateral you could put against the loan, this is where you would list it. Provide a prospective financial outlook for the next 5 years. In other words, tell the reader what you'll be doing over the next 5 years. Include forecasted income statements, balance sheets, profit and loss statements, and capital expenditure budgets. Make sure to clearly explain your projections and match them to your funding request. Let's go over each one of those segments that I described. The profit and loss statement. What exactly is it? Profit and loss statement is a financial statement that outlines a company's revenue, cost, and expenses over a specific period of time. So it's a look at your company over a specific time, say from January till June. Components of the profit and loss statement include that the revenue plus expenses equals profit. The financial statement. What is a financial statement? They are a summary of the operating, financing, and investment activities of a certain firm. They're governed by the Financial Accounting Standards Board. You'll see that investors are going to expect you to follow the guidelines from the FASB. It's a standard practice, and when they see that, they're going to know that you're a professional. A balance sheet. A balance sheet gives the financial position of the company. It shows the assets and liabilities of the company. It also shows how the business is being funded. Some of the components include assets, these are resources used by the company in order to run the business. Liabilities, these are debt that the company has. And owner's equity, they're part of the assets belongs to the owner. If you put up $20,000 to buy your business, that is considered equity. And that goes in this section. When it comes to reading the balance sheet, it needs to be clear, have clarity, and accuracy. Investors carry out analysis of the balance sheet to gauge the performance of the company. So, what's in that balance sheet? It's going to be assets, liabilities, and shareholders' equity. This brings me back to Dr. E's prescriptions for business success. Know your market, do your research, understand the government funding process, document all sales and expenditures through a banking system, keep personal and business credit below 30% of available credit, file your taxes, update your business plan annually. Remember that statement of information at the Secretary of State and its annual reporting requirement. Determine how you define success. Offer value to your customers in addition to products and services. And always think larger than you can imagine.